Welcome. This is Accounting with Bennett Tchaikovsky. Our topic today is property, plant, and equipment. And we're going to focus on what happens when we change some of our estimates when we are calculating depreciation. This presentation is copyright 2008 to 2018 by Bennett Tchaikovsky. All rights are reserved. So when we're looking at depreciation, and the problem we're going to be used today can be found on the video, property, plant, and equipment, double declining balance. So I want you to make sure you take a look at that because I'm not going to really focus on how to compute how to compute the depreciation expense using double declining balance. I'm really going to be focusing on estimates. But now back to our presentation. So when we look at depreciation and how we go through and compute it, there are really three elements. One is going to be acquisition cost, meaning what did we spend to acquire a particular asset? That is really not going to change. There's some things later which could change it, but we're not really focused on that right now. However, salvage value, or what a company expects to sell an asset for at the end of its useful life, and estimated useful life, this is how many years does a company expect to use an asset for. Both salvage value and estimated useful life are both estimates. And therefore, if we have a change in either of these, we're going to have to handle these, and we're going to have to incorporate these into the equation. Now, the question becomes, well, what do we do with them? What happens if something changes? And do we go into our HTTM, which is my acronym for the Hot Tub Time Machine? Great film, need to see it. And we use Google to figure out how do we change the past. I haven't really seen the second film, although a lot of my students tell me it's amazing. And we're not going to get in the Hot Tub Time Machine and change the past. We can only change the future. And so what we're going to do is we're not going to change if we've depreciated the asset for the year or for a prior year. We're not going to change that. Rather, what we're going to do is we're going to handle the information prospectively, meaning we're going to use it for future years of the depreciation calculation. So let's go back and take a look at Sahar's mom class call. It's been a smashing success. Just had an IPO, raised about $30 million. Great work, SMCCI. So SMCCI went through and essentially purchased equipment for a total of $500,000. Again, please refer to the other video if you want to see how this works. The one way I'm changing this question on the double declining balance is that now we're assuming on January 1st, 2019, that SMCCI determines that the equipment will now last 10 years from January 1st, 2019. And we're being asked to determine the amount of the depreciation expense for the year ended December 31st, 2020. So again, for this first year, when we're looking at double declining balance, the amount of the way we compute it is we have our acquisition cost minus the accumulated depreciation, or the amount of the depreciation taken to date, divided by the estimated useful life times 2. And we got that for 2018. We came up with, essentially it was 150,000. How did we get that? We said right here, well, 200,000 was for the full year. I'm then multiplying this by 9/12, and that's how we came up with 150,000. So again, if you have questions on this, please refer to the other video. All right, there we go. So, sorry. Perfect. So now we come into 2019, and this is where we have the new information. We're told that here, assume that on January 1st, 2019, that the equipment will last 10 years from January 1st, 2019. determine the depreciation expense for the year ended 2020. So what we have to go through and do, I'll say here, be a little bit more clear. The company will continue to use double declining balance. So what I'm going to do here for 2019 is my top of my equation isn't really going to change from what I did before. I have here my acquisition cost minus the $150,000 accumulated depreciation that I took in 2018. However, my estimated useful life has changed. I'm going to now divide this by 10, which is the new estimated useful life. And what I'm going to do then for 2019 is I'm going to now have 350,000 as my numerator, 10 as my denominator. I'm going to multiply this by 2, and what am I going to get? Well, I'm going to get 35,000 times 2, or $70,000. Which is going to be my 2019 depreciation using double declining balance. So I go up here to 2019, and when I get up here to 2019, and my little chart here, again, please refer to the other video. My acquisition cost is $500,000. The amount of the depreciation expense I'm taking in 2019 is $70,000. So what does that mean my accumulated depreciation is at the end of 2019? So I had my prior balance of $150,000 from 2018 plus $70,000 from this year. So my net book value is now going to be $280,000. With double declining balance, we always have to be concerned with over depreciation. Why is that? Because if we look at the equation, there's nothing deducted for salvage value. It's only the prior amount of the accumulated depreciation was taken. Since salvage value has not changed, when I'm looking at here, my net book value was 280, my salvage value was 200. So I still have $80,000 more of depreciation to take. So the question asked me for the amount of the depreciation expense in 2020. So what do I do now? Well, I go to 2020 and I'm going to use the same equation. I'm going to have 500,000 of my acquisition cost minus 220,000 of accumulated depreciation. And here I'm going to get $280,000 divided by 10, which here is my new estimated useful life. And so for 2020, this is going to give me 28,000 or 280,000 divided by 10 times 2, or a total here of 56,000. So this will be my 2019 depreciation using double declining balance. So I'm using the new information from this point going forward. And here I've got my acquisition cost, 500,000. The depreciation expense I took in 2020 was 56,000. So my amount of my accumulated depreciation is 220 plus 56. And I forgot to update this from my last problem. I apologize. So my net book value is my acquisition cost minus the accumulated depreciation of 224. And so my salvage value here is 200,000. So I'm still okay to depreciate, although I don't know for how much longer. But I know though, as of this point in time right now for 2020, the amount of the depreciation expense that I took was 56,000. So as a recap, when we look at this, the important thing about changes in estimates, remember, when we're dealing with depreciation, By its nature, it's using estimates. We're estimating the useful life. We are estimating the salvage value. The only thing we really know initially is going to be the acquisition cost. And remember, what we cannot do, we cannot go into the past and change what we've done in the past. We can only change what happens in the future. So if we get a question like this, the way we want to approach it is we're going to go first and say, okay, what did we do in the first year using that prior information? That's not going to change. And again, please refer to the first video before watching this video. So we're not going to change 2018, but for 2019 and 2020, what we're going to do is we're going to be using the new information. And here, our salvage value hasn't changed, although that really wouldn't matter except for when we're looking at the computation. But what is changing is the new estimated useful life. Note here, the way I worded this was very particular. I said on January 1st, 2019, essentially we're determining that it will now last 10 years from that date. Now, this is the way I test it. If you have another accounting instructor, they might say, well, if on January 1st, 2019, the equipment now is going to last 10 years in total, that may give you a different answer. But I'm saying 10 years from January 1st, 2019. So there you go. Thank you so much for watching this video today. Hope you enjoyed it. Please send me feedback if you have any, and have a great one.